Right now, right now. 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 Oh, I got a real good feeling.
We try to bring you high-quality educational and informational content every single day. Why do you think the price is having such an anemic time? The news story of the hour. Jump onto the chart. Is this the beginning of a massive financial unraveling? We gotta add a little addendum to the show map today. So we start here on the daily. Now, we've been looking at the RSI on Bitcoin's daily chart for the last several days. It always has been, but it's been increasing over the last 50 years since the government has been. Hey guys, what's going on? Jeb here, and welcome back to Coffee and Crypto Live. This is your week daily morning show where we bring you the latest and everything Bitcoin and cryptocurrency. And in today's video, Bitcoin has dropped $6,000 off of its all-time high that was set at $112,000 last night. Earlier this morning, about an hour and a half ago, Bitcoin dropped down to a local bottom of about $106,500 before instituting a rally that has now brought us back up above 110. Today, we need to talk about why this corrective movement has happened, and more importantly, we need to talk about the spectacular recovery that has happened ever since that drop has occurred. You know, we can't always determine why a correction has happened, but today it is very obvious. So I'm going to walk you through the chain of events that led to this correction, first and foremost, fundamental and technical. We know exactly what caused this correction. We can't always say that, but we, with a very high likelihood, know exactly what caused this correction this time. We also know why what caused this correction happened and the methodology that's going into what caused this. And we're also going to be talking about what this means for Bitcoin. Is this the beginning of a larger corrective movement? Have we double topped up here between 109 and 112? We're going to analyze all of that. If you recall to yesterday's video, I told you guys that I expect within the next 2 weeks, we are going to see a 5 to 10% corrective movement. That was yesterday's stream 23 hours ago that I said that, and it's funny because that correction happened over the last 2 hours. I could smell that something like this was coming. I'm not so sure we're done, but I could sense that something like this was coming, and we're going to break down exactly why we were able to tell that in today's episode of Coffee and Crypto Live. Thank you guys so much for being here. We've got a lot to cover, and we've also, more importantly, got a lot that we need to talk about how to profit from this situation. Last thing, we also have a very interesting story of a certain whale named James Wynn. We want James Wynn to win, and I'm going to show you why as this stream progresses. Thank you very much for being here. Queen's in chat. Billy Barry is in chat. Christopher Ryans is in chat. Bitcoin crashes to 109. Lol. Yeah, I know. That's the most beautiful thing. I love it when Bitcoin crashes back down to a previous all-time high. One day, you're going to read the headline. Mark my words, you're going to read this headline. Bitcoin crashes from $1.3 million to $1 million. One day, you're going to read that headline. Bitcoin crashes $200,000 in a month, 1.3 million down to 1.1 million. And there's going to be so many Peter Schiffs out there saying, ha, I told you so, because you're down 20%, except you're up 20,000%. Really is a lot of nonsense. Anybody that bets against Bitcoin loses. That's been true for all of Bitcoin's history. Sidney Rude is in chat. Paul Parker, Rolando Lima is in chat. Carlos Mejia is in chat. Steadybug is in chat. Crypto Granny. One House Productions. Staula said, good to see you back making videos and live streams. Missed you, Jeb. Missed you guys as well. Lion Daddy, Bob Riley in chat. Thank you all for being here. Let's get started. Thank you, Mr. President, for this wonderful, beautiful, best of all crash. Thanks, Trump. This is actually one of those times that we get to say, thank you, Mr. President. Thanks, Trump. So we're going to kind of break this down. Yes, this is a Trump crash because it's the greatest of all crashes, right? This is a Trump crash, and I'm going to explain why. At exactly 7:19 this morning, Donald Trump posted this Truth Social post. I have long ago informed Tim Cook of Apple, the chief executive officer of Apple, that I expect their iPhones will be sold in the United States of America, will be manufactured and built in the United States of America, not India or any place else. And we know this is Trump writing because we've got 2 spaces right there. We only needed 1, but we got 2. You know, Trump got up, doing his morning bathroom routine, decided to go ahead and type this out and crash the market for us. Thank you, Trump, for giving us a better entry. or anyplace else. If that's not the case, a tariff of at least 25% must be paid by Apple to the U.S. Thank you for your attention to this matter. Doesn't Trump just sound like an old guy who's really set in his ways with a certain phrasings? Like, my dad... There's like 100 different things. He just says the same thing over and over, and he's been doing it for the last 25 years that I've been alive. It's just the same phrase. The same thing. This is Trump's thing. This is his thing that he's just kind of developed. This is his revolutionary new phrasing. Thank you for your attention to this matter. Everything ends with that. 7:19. Keep track of the time. Just a few minutes later, he posted this at 7:43 a.m. Once again, keep track of the time. 7:19, 7:43. We're reconstructing the chain of events that led to this crash. Then we're going to talk about the cascading liquidations that exacerbated this crash, and then we will talk about where the market is going so far. Approximately 24 minutes later, Trump posted, "The European Union, which was formed for the primary purpose of taking advantage of the United States on trade, has been very difficult to deal with. Their powerful trade barriers, VAT taxes, ridiculous corporate penalties, non-monetary trade barriers, monetary manipulations, unfair and unjustified lawsuits against American companies, and more have led to a trade deficit with the U.S. of more than $250 million a year. A number which is totally unacceptable. Our discussions with them are going nowhere. Therefore, I am recommending a straight 50% tariff on the European Union starting on June 1st, 2025. That's in like a week and a half. There is no tariff if the product is built or manufactured in the United States. Once again, thank you for your attention to this matter." Thanks, Gramps. All right, so 7:43 a.m. Now, to continue following this story, we need to go look at the chart. When exactly did Bitcoin begin this nosedive? Yeah, it was at 7:43. So this news article, this Truth Social post happened here. Pretty obvious what's going on here. Trump ended up, whether he intended to or not, manipulating the market. The first post was 7:19. That led to our first of a series of cascading drops right here. And then we saw Trump post that second post indicating a potential 50% tariff on the European Union if they don't straighten up. And so we saw this drop occur this morning. So if you're wondering why did this drop happen, there is virtually no shadow of a doubt that it was because of Trump's post. We dropped 3.26% down to a local bottom of $107,340, lower on some other exchanges. That is a total drop of about that is a total drop off of $12,000, the exact all-time high as we currently sit, of a little about 4.02%. Now, if you wanted more confirmation about why this happened, I will go ahead and point our direct attention over towards the people that are in a bunch of long trades. So at 7:45 through 7:50, that 5-minute period, we saw $80 million of long liquidations take place across all cryptocurrency markets on all exchanges. On Bitcoin alone, in that 5-minute period, we saw $19.36 million of longs getting liquidated as people got their liquidation price hit. The reason that this happened is because a great number of people took long trades that were probably 50x, had a 2% margin call, and they got called because they were betting that this symmetrical triangle pattern, ascending triangle pattern right here, was going to break bullish. I have been skeptical for the last 24 hours. That's why I told you yesterday that I sniff a correction. The fact that Bitcoin kind of went parabolic right here and then started trading sideways, I was hopeful that we would break bullish here and we would end up going on a rally up to a price target of, for example, here, probably around 123,000. I think that's going to happen, but this does not surprise me. And I want to make sure that I give you guys a warning. For any of you guys that work with leverage trading, you have to be careful. And the reason that you have to be careful is because at any point in time, Orange Man in White House can post something on Truth Social and you get liquidated. Do be very careful with leverage. Be very, very careful with leverage. Once again, these are not people getting hit with their stop loss. These are liquidations in that they lost the entire principal balance. They lost everything. Within about an hour, we saw on Bitcoin alone $96 million of long liquidations. Okay? So that's where this came from. Beyond a shadow of a doubt, Donald Trump's announcement led to this. So, 3 major things I want to talk about. One, I want to tell you a story of a trader, because it's very interesting watching this guy's trades right now. This is going to be very informative. Second thing, I want to talk about why Trump is doing this because it seems to be pretty obvious that there is a story under the story that he's telling. And then 3, I want to talk about where Bitcoin's going. So first, we're going to talk about a trader. Have a little fun talking about this guy, James Wynn. Have you heard the tale of James Wynn? This is the billion-dollar trader that everyone's talking about on X right now. He opened a 40x Bitcoin trade with 7,500 Bitcoin. The position value this morning is $825 million. I'm going to keep this pretty brief, but he opened this trade about a week ago with the full expectation that by the end of this week, these are his words, not mine, that Bitcoin will be trading at $115,000 to $118,000 per coin, and he was expecting a profit of multiple tens of millions of dollars. He's almost been liquidated twice, but not quite, because he used a somewhat safe amount of leverage. He didn't use 100, he used 40, so he had a pretty low liquidation price. This is last night. His entry was at 109 on average, mark price 111, liquidation price 100, right? He was in profit $19 million, right? So it's an $800 million position. He's got about $23 million in the actual trade. Then the 40x leverage makes it a lot larger, of course. So he was down just a little while ago when Bitcoin dropped down to 107. He was down $7.5 million, which is a 37% loss for him. Now that Bitcoin has rallied since we started the stream, he said the swings are insane. Don't do 40x leverage, people. But we are back in the green for now. The whales want me gone. So he thinks the whales are hunting him. I don't think the whales are hunting him. I think that they might be. Who knows? But to some degree, I do think the whales are hunting the leverage traders. I don't think they're hunting specifically him. But he's back up $7 million. So he's gone from being down $7 million an hour ago to being up $7 million right now. So that's the story of James Wynn. Let's hope that he ends up making some money. Everybody, hashtag pray for James Wynn. I sent him a DM. His DMs are open. So I sent him a DM. I said, good luck and Godspeed, sir, right before he went on stream. So anybody who wants to go follow at James Wynn Real, tell him Jeb sent you. Tell him at Crypto Jeb on Twitter sent you. Would love to get an interview with him after this trade is said and done. Go blow up his DM. Say Crypto Jeb wants to interview you about this call and about this trade. And I'm very much hopeful that he makes it. Okay, cool. So let's talk a little bit about what Trump is doing. Why did Trump make this announcement? Is this going to happen? What's the story under the story here? There's a story up here. EU's unfair. There's a story down here, and that's bonds. The story above the story is that the European Union was, to a great degree, formed to compete with the United States. All the European Union countries, all the EU countries, back in the 50s realized we've all been obliterated during the Second World War, and we've got this giant dude named Stalin with 5 million troops, and oh wait, now he's got a nuclear bomb too on our doorstep. Half of the way through Germany. They've got half of Berlin, right? They completely surround Berlin. And the Eurozone was created as an economic barrier between the two. It was created as an alliance between the two to be able to, excuse me, not Stalin, I'm sorry, Putin. I said Stalin, I meant to say Putin. To kind of fend off Russia and their economic might because of the strength of the ruble, the strength of the strength of their oil industry, their natural gas industry, and the growth that they saw coming. So the Eurozone was created to fend off Russia, but also to fend off the United States. It was founded with the idea that if you can bring economic partnership between the European countries, there's less likely for a war to break out. Hopefully they can all continue being friends in NATO, and it was supposed to be the economic version of NATO. Of course, the United States was not invited because we're not in Europe. So Trump does not like the euro because they're not trading fairly with the United States. I'm not going to get into a bunch of politics on that. The story under the story is the one I'm really concerned about, and that would be the bond yields. So let me find the 20-year. In fact, we can just go to it on TradingView. The United States 20-year Treasury bond has started to take a drop. That's not it. 20-year government bonds. This is the 30. See if I can find what I'm looking for here. Yeah. So here are the 30-year. We'll look at the 30-year, and then we'll look at the 20-year. As you guys know, we've talked about recently how bonds have been skyrocketing because of the perceived instability of the United States dollar. This is really, really bad for Trump, because Trump, we've talked about before. I'll see if I can find the chart. U.S. interest. Trump realizes that if he wants to balance the budget, which is one of his goals, if he wants to balance the budget, then he's got to do something about, see if I can line the chart up in time. I cannot line the chart up in time. Let's see. Yes, I can. Here we go. He needs to do something about this. Right now, the United States is spending about $1 trillion a year on financing the United States debt, up from 2021, which was $350 billion. We have seen a 3- to 4-fold increase in the debt in the cost of the debt in the United States. Debt clock also has it. It's about $1.1 trillion a year. Let's see. Where is the interest on the debt? $1.025 trillion on the debt. We spend about $1 trillion a year financing the debt. If the bond rate goes up, then that means that debt gets more expensive. The bond rate, for any of you guys that are uninitiated in basic economics, the bond rate tracks the amount of money that the United States government will pay you if you loan them money. It's really kind of sad. The U.S. government is supposed to be the largest company on planet Earth, but they're kind of like that guy that just goes into more and more and more and more and more and more debt, doing drugs or something he shouldn't be doing, not being responsible, not working, wanting to sit on the couch drinking beer all day, and then he wants to come in and borrow money from you. Have you noticed that it's called Uncle Sam? Yeah, the United States government is that uncle. Yeah. I love the United States government. I do not love this. I love the United States. I don't love this part of the United States government. Anyway, the bond rate hit 5.15% on Thursday, which, for those of you who are paying attention, was yesterday. Yesterday, the bond rate hit 5.15%. That is the highest that it's been since 2023, and we only stayed up there for a little while. The overall trend is up. Bonds are getting more expensive, which means the cost of capital for the United States to finance the debt is getting more expensive. The averages are moving up. You can look at the 20 EMA here on the, let's look at the weekly chart. You can see the average is moving up, the 20 monthly EMA moving up. Bonds are getting more expensive. Oh, hallelujah. This chart actually goes way back. Good. The bond rate has not been this high. If we take this on regular, the bond rate has not been this high since before the 2008 financial crisis. Debt had been getting cheaper and cheaper and cheaper and cheaper and cheaper and cheaper and cheaper as people became more and more and more and more and more secure in the fact that the United States dollar was the strongest asset in the history of the world. This is one of the most important charts you'll see in modern economics that nobody will show you because they don't want you to understand the fact that the dollar is dying. Bond rates have been dropping for 4 decades until COVID happened. When COVID happened, and we went through 30 to 40% inflation in 3 years, something happened that is going to impact economics for the next 40 years. And that is that people no longer trust the dollar as the zero risk inflation hedge, inflation hedge against every other currency that it used to be. Rampant inflation has shattered trust, which has sent the bond rate skyrocketing. As the United States took out more debt, they were lucky enough that the bond rate was going down. We were taking out more and more and more and more and more and more debt to finance deficit spending, but that debt was getting cheaper and cheaper and cheaper and cheaper and cheaper, so the actual feel of that debt up until about 2020 was not changing much. If you look at this chart here, this one right here, the U.S. government was paying between, under $400 billion a year, which is a lot, but not much. I mean, it's less than 10% of the United States budget. Most of you guys pay more than 10% of your income in debt. I mean, it's not great, but it's still it's manageable. But then 2020 happened. COVID happened. People lost trust in the dollar. And so to hold the dollar, they demand a higher interest rate. And so the United States bond market bottomed out in 2020, and the era of cheap debt is now over. It's over. Let's see if we can get the U.S. 20-year bond. It doesn't track it as far back on the 20-year. That's unfortunate. Let's see if the 10 goes back this far. Yeah, okay, the 10-year bond goes way back. You can see this happened here. This happened all the way back here. Ever since 1981, we've been getting cheaper and cheaper and cheaper. I had a great uncle. His name was Johnny. Great Uncle Johnny. He was a farmer. Guy made like $1 million in farming, stuck it in bonds, made 18% a year. He bought a bunch of these 10-year bonds up here in the 80s and made 15% a year, and he retired on them. That's bonds used to be a great investment. It used to be a really, really smart idea. 15%, you're not going to get that anywhere else. Now, mortgages were insanely high, but as we saw the bond rate come down, we also saw mortgage rates come down, which led to a massive increase in the price of housing, which turned real estate into a great investment ever since the 1980s, which is why everybody who's rich right now that started 40 years ago, they got there through real estate. You're talking Dave Ramsey, you're talking Grant Cardone, you're talking about Donald Trump, you're talking about all these people. This decrease in the bond rate has driven a massive increase in the housing market because debt has gotten cheaper, which has allowed the prices to skyrocket, and it's also allowed the U.S. debt to skyrocket unchecked. This is a once in a century, maybe twice in a century shift away from cheap debt towards more expensive debt, and the United States government has to catch up. Why did I say all of this? I thought we were talking about Trump. We are. After he announced this, the bond rate dropped. A little bit. Not much, but a little bit. You can see the 10-year yield, right after he announced this, dropped by almost 20 basis points in an hour. That's a big drop. So that the Treasury can go and take out more bonds, raise more capital to increase the coffers at the Treasury to finance the debt for longer. And their 10-year bonds, right? It's locked up for 10 years. Right? 30-year bonds have dropped. Trump needs to secure as much government funding as he possibly can, as quickly as he can, so that he does not go down in history as the president who spent $10 trillion on financing the debt. Why would tariffing the Eurozone and Apple lower the bond rate? The reason is that the United States still has the most economic might of anyone in the world. With that economic might, if we bring it to bear against the Eurozone, we win. And everyone who's honest knows it. Now, we might take a loss. It might be a Pyrrhic victory, but we will win. It's not a question. In the short term, we will win. Or at least we will lose less hard than Europe. If you want to consider not losing as hard as Europe, winning. It's a little bit like mutually assured destruction. They lose 100% of their cities, we lose 50%, but at least we're still alive. They're dead, right? So we'll win, and so that causes a flight to safety out of risk-on assets, even out of equities, because equities, the stock market, they get hit very hard by tariffs. 50% tariff on everything from Europe. Any company that does business across the pond is up a creek if that goes into effect. 20% duties on iPhones sold in the United States. That's not great for Apple. It's really not. Right? It's not. Which is why this morning when Apple opened, it gapped down because of what Trump said, right? These tariffs are serious freaking business. A 4% drop in Apple. Do you understand? That's like $50 billion in market cap gone with a tweet, with a Truth Social post, where the grammar's not even totally... I mean, look at the double space right there. In the United States of America. I expect their iPhones will be sold in the United States of America. I'm not even saying whether he should or he shouldn't do this. I'm just saying it's having a real impact in the market, right? So what's the point here? If you... boom. If you flex American might, other countries get put in their place, which leads people to flee out of foreign reserves, out of foreign investments, out of foreign equities to safety, because they sense that there's more fear, uncertainty, and doubt in the market. Where do they go? Well, the world is still accustomed to bonds, at least for the time being the safety. So if you're trying to get out of the stock market because you think it's going to crash, oh, look at that. There's your crash. If you're trying to avoid that, what do? You flight to bonds. Which is why the bond rate went down, because the demand went up. Here's the issue, though. If that's the game that Trump was playing, it didn't work for very long. Because if that's the game that Trump was playing, we're actually higher 4 hours later on the 30-year yield than we were before. So if that's the game he's playing, trying to get the bond rate down so that he can finance more government deficit spending for funding the Golden Dome, for funding the wall, for funding deportations, for funding all of these things, it's not working. The bond market is Trump's Achilles heel. He seems to have a handle to some degree on everything else, but the one thing that I don't think he's going to be powerful enough to reverse is this trend. A 40-year downtrend in bonds COVID shattered global trust in the dollar that took a century to build, and I don't know that it is ever going to recover the way that it was before. Now, how does this apply to Bitcoin? Because ultimately, this is a Bitcoin channel. So all this macroeconomics is great, but we need to figure out how it actually applies to our Bitcoin investment. When you see the stock market drop and people flight to safety, they flight out of risk-on assets. What do they still consider to be a risk-on asset? Foolishly, they still consider Bitcoin to be a risk-on asset, which is why Bitcoin dropped right here below this uptrend. Bitcoin dropped below this uptrending level of support. If you're a leverage trader, you're putting your liquidation price right below that. Everybody that does leverage trading knows how to read technical analysis. People think, oh, technical analysis is optional. No, it's not. Whether you're an investor or a trader, you need to learn TA. I'm purely an investor. I don't waste time with trading because you get burned on it, and it's better just to buy Bitcoin and hold it. But I have been a trader at plenty of times. Both of them use TA all the time. Anybody who's entering a leverage trade, they probably did enter here expecting us to break through 112. Trump sitting on the potty makes a post about Apple, and then we drop down here down to $110,000. They all get liquidated. That's why Bitcoin crashed. But here's the good news. In the short term, and by short term, I mean the first 10 minutes after Trump's post this, and we see bond rates go down, people think, people are going back to bonds for their safety, forget Bitcoin. But then the bond rate shot back up. This announcement this morning is actually going to end up being one of the reasons that Bitcoin breaks all-time high. Originally, this bond rate going down caused Bitcoin to go down. Bitcoin is positively correlated with the bond market. This rate going down originally dropped Bitcoin, but then it shot right back up, and now it's higher. This is just the last few hours. This shows that even if Trump flexes American might, the uncertainty which drives bond rates up, hopefully you're tracking all this. I know this is complicated. The uncertainty that drives bond rates up is actually stronger than the flexing does to bring bond rates down. It seems, therefore, that no matter how much Donald Trump musters to get two plates off the chest, it's just not working. He's just not managing to get that bond rate to come down. It does not seem to matter how much he flexes American might. It doesn't seem to be enough to drive confidence in the United States dollar. It seems, therefore, that even before Trump got here, and partially because of some of his actions with uncertainty in the market, that people's fear of the United States dollar has now become greater than just about anything that the U.S. government can promise them. If that truly is the case, which I do believe that it is, that is one of the greatest economic inflection points in the last 100 years. If people no longer trust that the United States government is capable of driving the bond market with policy, then the bond market is free-floating. And if the bond market is free-floating, the bond market can only normalize to one thing, and that's inflation. And if inflation is continuing to happen the way that it looks like it is, then the bond rate will continue to go higher, increasing the amount of money that the United States government has to pay to finance the debt, which will increase the deficit, which will send the United States government further towards insolvency, which will send the rate higher because people now no longer trust that the United States Treasury will be in charge of a currency in 30 years. So why would they buy the 30-year rate? Unless the Treasury pays them 8, 9, 10, 11%, so they get all of their money out in profit within the next 12 years. This uncertainty that Trump is trying to curtail, but does not seem to have the power to curtail, leaves one option, and it's Bitcoin. Make no mistake, what's going on in the bond market is the single most important driver of price in Bitcoin. Because if people still considered U.S. Treasuries to be the safe, quote-unquote, zero-risk investment that people claim they are, then the rates would still be 2%. The rates would at least be under 4%. But they're not. They're high, and they're increasing. Shattering the world's trust in the United States dollar was one of the worst economic decisions in the history of mankind. And it will lead to the death of the dollar, and it will lead to the international global hegemony of Bitcoin. This is programmed in. So, wow, that was a lot. With all of that in mind, what do we do with that? Oh, man, I just taught you more economics than your econ professor is going to teach you in 4 years of school. I mean, not really, but I mean, come on. This is actually applicable stuff. Make sure to hit that like button, subscribe to the channel if you have not already. We are bringing you top tier quality here on this YouTube channel. Why did Trump make this announcement? Probably because he's pissed off at Tim Cook and he's got a bone to pick with the EU, and he decided to, shake the hornet's nest this morning. The story under this is that he's trying to flex American muscle to get the bond rate to go down so he can refinance the debt and close the deficit and stop the United States from going bankrupt, because he understands that would be the end of American sovereignty. Literally. The United States government would have to struggle to survive that. You're talking about apocalyptic scenarios here. That's why Donald Trump will acquire Bitcoin. It will happen. It will happen. Let me say that again. Donald Trump understands, say what you will about him, but something that is very obvious is that he understands that the debt is an issue, and he understands that the only way out of that is to get the bond rate down for cheaper debt, to kick the can so far down the road that people forgot he had anything to do about it with it, because he does, and to buy Bitcoin. Donald Trump will be one of the largest advocates of a Bitcoin strategic reserve. And if Cynthia Lummis's bill doesn't pass, which it probably will, he's just going to do it by executive order and try and force it to stay in place somehow. Just start playing with government as much as he can. All right, so all that in mind, what does this mean for short term? What this means for short term is that Bitcoin just had 2 of the highest daily closes in history. What this means for Bitcoin is that we've still got, actually I take that back, we've got 4 highest daily closes in history, going on a 5th one right now. What this means for Bitcoin is that the future is extremely bright. What this means for Bitcoin is that retail is showing up. Everybody's starting to ask, what do you think about Bitcoin? I got people texting me right now. I was trying to orange pill the preschool director yesterday. I mean, everybody's talking about Bitcoin right now. Except they're really not. Everybody in Bitcoin is talking about Bitcoin right now, but retail still hasn't shown up just yet. They're starting to, but they're not really here yet. It's coming, but it's not here yet. We've got the golden cross on the daily chart. We've talked about that. Right there. Just happened. Last few times that happened were right here and right here. And you can see what happened after, right? Right here. We've got a big rally coming. Do not fear. I never called that the end of this rally was coming. I said a 5 to 10% correction is going to happen. And the good news here is that Bitcoin is actually putting in a relatively strong bounce, considering it did need to cool off. Bitcoin did need a correction. It really did. We've got a bullish engulfing candlestick formation here. We shall see what happens over the next couple of hours, but it's actually still sitting above the previous all-time high at the moment anyway. Now, it's tentative. We're not far above it, but we're technically still a few $100s above the previous all-time high. We'll see what happens. Could this be the beginning of a drop down to 100, which would be a wonderful opportunity to buy more? Would this be a drop down to 100, which would be a wonderful opportunity to bounce from there, rally 40% up to 140,000? Possibly. What I can tell you is this. I have no reason to believe whatsoever that the bull market is over. A lot of people are scared that Bitcoin's double topping right now in a very similar fashion that it did in 2021, 2022. We've got an ascending triangle, an ascending level of resistance here. I want you to know that it is possible that we're repeating the same pattern. It is possible that we're repeating the same pattern bear market. I do doubt it, though. I do sincerely doubt it. If we break above this pattern, really all bets are off. $150,000 is programmed in this cycle. If not, okay, fine. We're still probably looking at $250,000 to $500,000 Bitcoin next cycle by the end of 2028 to 2029. That sets us up perfectly. That tees us up perfectly for $1 million Bitcoin by 2035. Even if this were the top of the bull market, we're still looking at $1 million a coin by 2035. Let's say this is the top of the bull market. Let's say we drop 50% from here. Bitcoin drops back down to $55,000. How could that happen? Let's say Bitcoin were to go into a bear market and we dropped here, 55K. 50% drop. Let's say that did happen. Oh no, let's say that happened. Buy. I mean, come on. Are you paying attention? Like, okay, fine, whatever. Buy more. Don't get freaked out. Keep your conviction, because the bond market imploding, the end of the U.S. government's hegemony over the dollar and over world currencies is going to lead to the destruction of the dollar, and also to the growth of Bitcoin, to the massive inflation of Bitcoin. Now, someone wanted me to point out the M2 money supply. The M2 money supply is enormous right now. It's about $21.76 trillion in U.S. dollars. This has gone through meteoric increase and is continuing to go through increase starting about a year ago. About a year ago, we started to see more money flow in, and it's continuing to do so. We're about to break an all-time high on M2 money supply. And the M2 money supply does, generally speaking, front-run Bitcoin. It generally front-runs Bitcoin. And as the money supply goes up, you're going to see Bitcoin go up more as well. Now, guys, I do kind of have to wrap it out here a little bit early today, but I do want you to understand that this is not something that you should be scared of, this correction that just happened. If it does drop down to $100,000, fine, nothing to be fearful of. And we have every reason to believe that faith in U.S. government bonds is crashing and faith in Bitcoin is growing. Let's read chat just a little bit, and then I got to wrap it out. Orange man in the White House. Yep, that's right. I don't know. Why does his skin look like that? Like, I don't care. It doesn't bother me. I've never seen that before. Have you seen that before? I don't know. It's interesting. I don't know. Not good, not bad, just different. I don't know. It's like if somebody showed up and they were purple, I'd say, "You breathing okay?" And they say yes. I'd say, "All right. Okay then. All right. Must have got some face painting done, but okay." I don't know. I'm not making fun of anybody. If that's like a certain ethnicity, I'm not making fun of it. I've just never seen it before. I don't know. It's by the flipping dip Friday? Yeah, pretty much. You won't top with no retail. The FOMO's not here. Nah, I don't think so. Bad foundation, probably. Self-tanner. I don't know, because he always looks like that. You've never seen a picture of Donald Trump not look like that. Like, that's got to be religious dedication to the tanning bed, if that's what that is. Have you ever seen a picture of him that he didn't look orange? I've never seen a picture of Trump where he doesn't look orange. I think that's his skin pigment. Again, not a good or a bad thing. It's nothing to judge him on. It's just different. I don't understand. I've never seen it. I don't know. It's cool. Maybe it's a certain ethnic group, and I'm just not familiar. Somebody's going to take everything I just said out of context and say I'm a racist. I'm not. Hey, Jeb, happy to catch you once again. Hey, guys, if you haven't already, make sure to sign up for Lux Algo. Lux Algo is absolutely phenomenal. It's called this entire rally. Also, make sure to sign up for Blowfin. Links down below. You can get access to Blowfin, get 20% off, get 20% cash back on all your trading fees. So make sure to sign up for that. Orange Lives Matter. That's right. All human beings have intrinsic value regardless of your skin color. Even if it's orange. It's spray tan, Jeb. But again, he's looked like that his entire life. Hasn't he? Hadn't he? Maybe it is. I don't know. That is some dedication. You just got to think about like Darth Vader sitting in like the back to tank, right? And it's just his thing. It's that once a week, Trump goes and spends 4 hours bathing in spray tan. I guess that's what he does. I guess that's part of his religious beliefs or something. I don't know. But it's interesting. It's interesting. Not knocking it. Do whatever you want. I don't care. But yeah. All right. Hope you guys enjoyed today's stream. Make sure to hit that like button, subscribe to the channel. Stay tuned for more content. I hope you enjoyed today's economics lesson. I hope you understand that this is a healthy correction, nothing to be fearful of. At no point do we have any reason to believe right now that this is something to be fearful of. I hope you enjoyed today's stream. Like I said, I got to wrap it out. Before I go, I just first want to thank each and every single last one of you for watching, as always. And I will see you guys in the next video. Peace.
Oh, I got a real good feeling.